Welcome to the discussion of 2018 June Edexcel IAS accounting paper. This session of examination has been on average, with the grade boundaries being quite normal. This paper consists of questions from the lessons of financial statements of a sole trader, costing, profit reconciliation, ledger accounting, ratio analysis, non-profit making businesses, inventory valuation, and partnerships. Section B of the paper comprises of 4 questions, out of which you should attempt 3. Now we will be taking a look at question 6 of these choices. As always, read the question first and identify the key points of the question. The key points that can be gathered from this question include Asanka and Bulu admits a new partner named Padman into their partnership on 1st May 2017. The question is centered around the change of ownership and its results. Having gathered the key points of the question, let us now see what does Part A ask us. Part A asks us to state the rules that would apply to certain cases when there is no partnership agreement. First, it is the case of interest on partners' loans. Always, unless there is a written partnership agreement, 5% interest should be paid on partners' loans per annum. Second, partners' salaries will not be paid when there is no written partnership agreement. Third, the profit or loss will be shared equally when there is no written partnership agreement. All of these considerations are based on the Section 24 of Partnership Act of 1985, which should be followed by partnerships whenever a written partnership agreement is absent. Part 1 of B asks us to prepare the appropriation section of the SOCI for the year ended 30th April 2018. So, first start with the format. In this case, any payments done from the partner to the business is added, and vice versa. Now start entering the information. In this case, it is easy if you make a note of the information from the question, which you need when answering this question. First, interest on drawings will be 5% of the drawings figure given in information 2. Second, interest on capital will only be paid to Asanka at 8% of his new capital figure. So, to do this, we have to do a manual working for Asanka's capital. Third, no interest on capital for the other 2 partners. Next, the salaries figures should be recorded. Finally, we should total the appropriation account and divide the profits within the NIV ratio. Part 2 of B asks us to prepare the capital accounts for the 3 partners. It's just a simple ledger account. Now let us start entering relevant figures into this. The capital account consists of long-term capital transactions. This means all opening capital balances, goodwill changes, additional capital investments will be recorded here. Let us now identify this information from the question. So, first we record the opening capital balances on the credit side. Next, Padman's capital introduction is also created. Thirdly, the goodwill entry should be done in 2 steps since goodwill should not be retained in the books. Fourth, Asanka's withdrawal of capital should be debited. Finally, we should balance it off and get the carried down and brought down balances. Bringing that into an end, Part 3 asks us to prepare the current accounts for the 3 partners. In this case, again, first identify the information we should enter here. We should start with the opening balances. Then move on to those information in the appropriation account. Everything that is added in the appropriation account should be credited, and those subtracted should be debited. Thereafter, we should record the drawings figures from the balances and check if there are any salaries or interest on capital paid. This question has a scenario of salaries paid. In this case, to find the salaries paid, we should subtract the salaries of each partner with the salaries accrued given at the end of the question. Finally, we should balance the current accounts and find the current account balances. The last part of the question asks us to evaluate the use of a formal partnership agreement. Since this question is for 6 marks, we should at least state one argument for and one argument against with at least one linking point. We should conclude the answer strongly. Also, remember we should discuss both financial and non-financial factors. Now, let us look at a sample answer. If there is a partnership agreement, it is easy to operate since the terms of the partnership can be well understood by the partners. This helps to have a smooth relationship among the partners, making decisions much easily and fast. Secondly, less disputes will arise due to the presence of the agreement. This becomes a case especially when the business is booming. However, there are costs involved in forming the partnership agreement. It also can be time-consuming, depending on the number of partners and circumstances considered when making the agreement. Despite the presence of this agreement, there can be events of disputes among partners which may arise as unanticipated. Overall, it is better to have a partnership agreement. A written form would be the best. In this case, the yellow highlights in the answer are the fresh points and the green ones are the linking points. I hope you have benefited from this discussion. Subscribe and stay tuned for our next video on 2018 Jan paper discussion. Do not forget to share this with your friends and do comment below if you have any queries or requests. The link to this question paper can also be found in the video description below. Have a great day.